Hi guys, welcome back to our channel Pixeled Apps. So today we are going to talk about a very interesting topic, that is Netflix. Netflix is one of the few companies that has been battered this year, and it's in the same league as Disney, bearing losses. Streaming companies and entertainment companies have not done well because they haven't proven the economics and they haven't proven that they can make money. Disney and Netflix are both losing money, at least on the streaming side of their businesses. So this all comes together. The earning reports from Netflix does not only reflect earnings but also heavily on Disney. And Disney investors should pay attention to how other streaming companies perform. And I'll give you some predictions. Netflix is one of the first companies to report its income report, so there's a lot of pressure on it. If this earnings report is awful, if they earn less money than expected, if the way they lose more subscribers than expected, this could be really bad. If they have over 2 million subscriber losses, I expect the stock to fall dramatically. Netflix is down significantly, and after reaching a high of 691 in the previous year, it is now down to 190. However, Disney has experienced a similar dramatic drop from its all time high. If we look back on earlier last year, it was $201 per share. Now the company trades at 98. The stock price has been reduced by more than half, and the stories are very similar. Disney is trading on its subscribers and streaming growth rather than its parks, and Netflix, of course, trade on its subscriber growth as well. So both of these companies are tied to the same businesses, streaming, the economics which yet has to be proven. The thing about Disney is that as the company has moved into streaming, its free cash flow has dropped dramatically to 0.87, the lowest free cash flow yield of any company in my entire portfolio. You can see what's happened right here. Here's the free cash flow. Year after year, Disney produced 3 billion, 4 billion, 6 billion, 8 billion, and 9.3 billion before dropping to 1.73 billion in 2019 when they launched Disney Plus, and then to 1.99 billion in 2021. This is not a lot of cash flow, and what investors are concerned about is streaming a profitable business that can generate real cash flows. Disney is having a difficult time making money with Disney Plus. They are in the early stages of it, but they are still not profitable with their streaming portion. And then we have Netflix today reporting a massive subscriber loss. So, on both ends of the story, we have companies that are having a difficult time growing subscribers. And if they are growing subscribers, a difficult time monetizing those subscribers across the board streaming is proving to be more difficult. If Netflix fails in their goal of monetizing streamers to the point where they can become free cash flow positive, Disney will be negatively impacted as well. So a lot comes down as to how the entire industry does. If you are an investor in Disney, you should be rooting for Netflix to do well. If you are not, you are investing in a company that's going in the exact same industry. The big question is how much Netflix internal forecast was for losing 2 million this quarter, and that there's third party forecast saying they are going to lose 2.8 million. So a lot of this comes down to how many subscribers Netflix is going to lose and if they can turn around their business and gain subscribers. The bigger issue is whether or not the trend will reverse, or whether or not this company will add subscribers meaningfully for the full year. That's the key swing factor right now, and the market is saying they don't believe it. Investors haven't just given up on Netflix, they have given up on the streaming sector. When Netflix multiple fell, so did Disney's. Now Netflix has announced, even though they are losing subscribers, they are going to try new things to grow subscribers, out of which is an advertising tire that they have made the deal to partner with Microsoft. One thing people often forget about Microsoft is that they are an advertising company. In fact, they generate $10 billion revenue every year in advertising, which is a significant business line. Most people think of Microsoft as just subscriptions and corporate contracts, but they also do advertising. What's really important about this move is that the only thing that matters in the advertising world is time spent. You don't get paid for having a subscriber in the subscriber world. Considering the advertising opportunity, Netflix is the one with the most time spent. The people are spending more than 2 hours a day watching Netflix. That creates a very large opportunity, but it doesn't mean they are going to execute well. Doesn't mean it will be successful, but the opportunity is massive. The only real competitor in terms of time spent watching is Google with YouTube. YouTube is a massive player in advertising, and Disney isn't there. There is no HBO Max. Comcast isn't there yet, and other companies can't compete with the watch time. Disney is a company that is currently not generating the amount of free cash flow that it should be because they are in the early stages of their streaming business. They are putting a lot of the cash flow into streaming and reinvesting it to further grow those streaming numbers. If you are interested in any of these streaming stocks, you will probably want to watch how Netflix does because they are the biggest. They are going to run into issues that these other companies haven't run into simply because of their lower subscriber count. So, in terms of Netflix and Disney, I personally think that this quarter will be tough for Netflix. I don't think it will be pretty, but I think Netflix will continue to grow. Please don't forget to like, share, and subscribe to our channel to hit the bell icon, and also please don't forget to check out our book that's exclusively available on Amazon.